The key details surrounding CCIV and Lucid Motor merger. Hello everyone, and welcome back to our channel eMotion. Today we're going to explore the CCIV and the Lucid Motor merger. After making an official announcement about its plans to merge with the EV manufacturer Lucid Motors, the company of SPAC, Churchill Capital Corp. 4, has gained significant traction on Wall Street. The merger is aimed at targeting the booming luxury EV market, and projected sales estimates predict that the company could grow to nearly $733 billion by 2026. The merger was completed on the 23rd of July with a shareholder vote held on the day before. Let's take a look into some of the key details regarding this merger. Compendium about the merger. The merger was completed on the 23rd of July, just after the completion of voting of the shareholders. The shareholder meeting was held at 10 a.m. EST on the 22nd of July through a webcast, and they decided the fate of the two companies. The total number of individuals who are a part of the agreement were more than enough to approve the merger. For those who are not aware of the agreement, here's a brief explanation of it. As said before, a voting and support agreement to vote in favor of the transaction was completed successfully by a large majority of Lucid shareholders. As per the plans of Lucid Motors and CCIV, the equity value of the merger was nearly $11.75 billion. Due to this, Lucid Motors was expected to raise a sum of $4.6 billion, whereas the total net cash proceeds Lucid was to receive was an estimated value of $4.4 billion. By that time, Lucid Motors had plans for this capital of $4.6 billion, which included funding for strategic initiatives like the development of the upcoming luxurious electric SUV named Project Gravity and the delivery and production of the Lucid Air. All these initiatives would be completed with the help of this capital. Lucid Motors also had plans of growing and expanding its Arizona manufacturing facility with the help of the money raised because of the merger. Back in February 2021, there was an official announcement from Lucid Motors stating that the company had successfully entered into a definitive merger agreement. The core purpose of this agreement was to make Lucid Motors a publicly traded one following an SPAC IPO deal. The value of the shares was set at $15 per share, as per the PIPE offer, and moving on to the IPO equity value, the total was estimated at $24 billion. The value had been estimated according to the outstanding 1.6 billion shares once the merger would be completed. The main reason behind the increase of the company's market cap from $6.9 billion to an impressive value of more than $40 billion is the excessive increase in the number of shares post the merger. In July 2021, this value was estimated based upon their trading price of $25 to $26 per share at that time. As expected before, the company is slowly recovering from the fall-off in the stock prices. But, as per some senior analysts, the long-term projects of Lucid Motors will be helpful for the company to sustain these drops in stock prices. The significance. As Lucid Motors has many long-term plans, this merger is an essential element for them. First of all, Lucid is aiming to produce nearly 500 automobile units in the year 2021 and will work hard enough to take this number up to 34,000 in the upcoming year. And the demand for Lucid Air by its customers is rapidly increasing in the second half of 2021, especially in North America. It's interesting to know the fact that Lucid Motors will be able to produce nearly 250,000 units by the end of 2026 and then 400,000 units by the end of 2030. The CEO of Lucid Motors, Peter Rawlinson, has some highly positive plans that Lucid will be able to produce up to 1 million vehicles by the year 2027. Though it seems too optimistic, we can't underestimate the power of anyone. Lucid Motors has equal chances to reach their goal before the deadline. The company also plans to make a production facility in the Middle East, which is going to be a part of the Great Kingdom of Saudi Arabia's Public Investment Fund. The manufacturers of EVs have the full support of the Kingdom of Saudi, as it will be really helpful for them to reach their goal of a sustainable future. But discussions between the two about the plans to make a production facility are still in process. In many European countries, the bookings for Lucid Air were opened in January 2021. But now, the people of the United Arab Emirates can also book a Lucid Air variant of their own. From this point, the bookings and sales figures are expected to project towards incredible heights, as the people of Middle Eastern countries are all waiting eagerly for these brand new EVs from Lucid Motors. The deliveries of Lucid's EV products to its Middle Eastern customers can be expected in late 2021. But still, a majority of Arabs expect a lavishing touch in these EVs from Lucid Motors. Moving on to the revenue side, Lucid Motors has projected a $2.2 billion revenue for the year 2022, which can be expected to go up to $22.7 billion in 2026. During the initial stages, if a company plans not to go profitable for a few months, the idea of a merger can be very helpful for surviving and thriving. future of all the EV industries, and Lucid. It's been predicted and estimated by several CCIV investors that if the increased market cap of $40 billion will be more than enough to sustain the EV development, this, in turn, will be a major post-merger decline in the stock prices. And this will have its effects on Lucid Motors and all the other EV makers. It's also being contemplated that such a post-merger drop in the share prices is nothing new and is common in the history of a lot of great companies. It just prolonged for a short period in the case of Lucid Motors, and it is swiftly recovering and rising steadily. The major reason behind a rapid recovery from the slump is that Lucid Motors has a lot of long-term projects that are planned to be released in the next few months, but their release can be expected in the beginning of 2022. We can clearly see that the stock price is starting to recover and the expansion has started soon after the Lucid Motors with CCIV. In July 2021, Lucid Motors were at a state of pre-revenue, and so were all the other leading EV makers. In the case of the other EV makers that were at a pre-revenue stage, they were trading at a ratio of 16.59 on an average for the price through sales. The company is still planning to start the delivery of Lucid Air by late 2021. From the exterior looks and design of the EVs, Lucid Motors has done outstanding work, which can ensure success for the company still in the pre-revenue state. At this stage itself, the company of Lucid Motors has nearly all the slots of its top-of-the-line Air Dream variant booked, which starts at $170,000 and goes up to $200,000. Thus, Lucid Motors will not have any sort of problem in the long run and will also be able to freely deal with the $40 billion market cap very easily. The company will be able to do the same by constant consistency in its performance. Lucid Motors has to deliver the products in time as they promised without having any sort of problems. The next project of Lucid Motors, the Project Gravity, is also highly expected to be equally impressive product, the same as Lucid Air. Only then the EVs of Lucid Motors will stay ahead in the game and top the board in competition that it has within and also outside it. From a wider perspective, it portrays that if a company, an EV maker to be exact, has a good product that fills the gap in the market and has top features, it can secure investment through such mergers. Whereas, on the other hand, the EV makers that do not have a product to show up are still striving, like the Lordstown Motors. This in turn can be encouraging to all the other EV makers to develop their products precisely and finally benefit the customers. The Churchill Capital Corp has entered a merger along with the great Lucid Motors in the form of an SPAC deal, which will make the company available for public trading. This factor, in turn, will give Lucid Motors the capital that it needs during its initial phase, where it won't be very profitable. Apart from all of these things, the company of Lucid Motors needs the capital to develop the upcoming project named Titan Electric SUV. In the list of top priorities for Lucid Motors, deliveries of the products top the list, but this is not going to be very easy for them without a huge amount of capital in their pockets. The merger will bring down the stock price and cause an increased market cap, but this can be sustainable as the company has long-term plans instead of short-term plans. The merger of Lucid Motors has successfully resulted in the company thriving and will stand as an example for all the other old and newly emerging companies that the most essential thing for making it huge in the market are to have a dream team, profitable plans, and an equally stunning product. What do you think about the CCIV and Lucid Motors merger? Comment below. If you enjoyed this video, then smash that like button and share it with fellow car enthusiasts. Oh, and in case you missed it, head over to our video on the frightening economics of the Tesla Model Y that will leave you stunned.